Let's have a look at the Aussie market and the Aussie index. So we've been in a pretty good uptrend since we broke out above these levels here on Friday the week before last. Had quite a strong week last week, a down day on Friday, and as I said earlier, quite a bit of this selling on Friday occurred in the last 30 minutes, and I would fully expect that that'll be reversed on Monday. So we could quite well see we dropped by 35 points on Friday. I could see that perhaps being reversed and a bit as well. Now the drivers for our index are basically BHP and Rio and the banks, and I understand that the American Depository Receipts, which is BHP and Rio trading in America, both traded significantly higher on Friday night, so that should flow through to our market on Monday. Rio was sold down a bit on Friday because of disappointment. I'll just have a look at the Rio chart here. So we're in this trading range on Rio, which is bounded by these two areas through here, which we can even put that as a bit of an upsloping channel. So it looked like we had broken out on Thursday with a good, strong, positive close, but the market was disappointed that Rio had was intending to put all of their buyback of shares to the UK shares, so therefore the Australian market would not see any significant part of that buyback. I think that was disappointing for the market, but I think fairly quickly the market will start to focus back on the fundamentals, and the fundamentals really are quite strong. It was a great profit result, and things look even better for 2011. So I would expect Rio to fairly quickly regain and start to head up towards this first target level at about $100 or just a touch over. So when we look at commodities, base metals are still rising. We'll have a look at both copper and nickel. Precious metals correction is probably complete, although when we look at the gold chart, I'm not absolutely convinced that it's complete yet, but it certainly looks pretty good. And I think if there was to be a bit more of a correction down, it would be pretty brief. Silver is stronger than gold, and I believe silver's heading for $40 plus. Oil is lower in the short term, but I believe it's heading higher, probably based out around about the $84 to $85 mark. And tin, of course, is still rising. It's above $31,000 a tonne, and still looking very strong. So there's the tin price over the last couple of years. So you can see it's really started to accelerate since the middle of last year. Basically, it was trading about 16,000. It's doubled in the space of 7 months. And that situation doesn't look like changing anytime soon. The copper inventory has picked back up a little bit, but it appears to be plateauing just under the 400,000 tonne mark. As a consequence, the copper price is going up, and we'll have a look at a bigger picture chart on copper in a minute. The nickel stock levels have started turning down again. They did rise for a period of time, but they've rolled over and started heading back down, which is good for the nickel price. So looking at keeping an eye on some potential nickel stocks in the Australian market. So let's have a look at some of those metals charts. So first of all is gold. And let's just pan back and have a look at the bigger picture here on gold. So you can see we've got a very strong uptrend that started back in October of 08, and basically the price has adhered to this uptrending line. We've had 1, 2, 3, 4, 5, 6, 7, 8 touches, or pretty near touches. So that's a very, very significant line. So a break of that would be highly significant. But at the moment, it looks like it's just heading sideways. I was looking for it to pull back here to this perhaps 1290, 1285 to 1290 area, and it could still do that, but it's equally possible that we are basically heading back up again. So the key for me is, as long as it stays above this level here of 1310, in fact probably if it stays above this, the low of last Monday, which is at 1343. So a break of that below there, a close below 1343, could see us head back down here. But as long as it holds above there, I think gold probably looking pretty good. The other sign with gold, I guess, is that that the gold stocks have started moving, and normally they move ahead of the gold price and it follows fairly soon after. Let's have a look at silver. Silver, as you can see, if you look at the 50-day moving average, has been much stronger than gold. We've had a pullback to exactly the 38.2% level, and that clears the way now for it to move higher. So currently sitting at just on $30 an ounce, but I think every chance that it could head up higher towards the $40 plus area. So we don't have a lot of silver stocks that we can potentially trade, but there is an option to trade physical silver, and I'll be covering that in the case study on Tuesday night. Now let's just have a look at a bigger picture chart of copper. So here's copper. We were down at $1.30 in December of 2008. We're now at $4.60, so we've basically gone up by nearly 350% in that time, with a really, really strong run since June of last year. So with copper, we could pull back to this level here, which is around about the 420 mark, so 410 to 420, and still be in uptrend. So the copper price currently, let's just tighten in on that. The copper price currently is $4.54. We could pull back into this area here, 410 to 420, and still be in uptrend. So, and at these levels, copper producers are having a field day. So, we don't really need the copper price to keep rising. We just need it to basically hold above this $4 level, and everything works pretty well. So the opportunities this week, short-term strategy. I'm pretty comfortable with most of our open positions. Obviously, some partial profit taking, as described in the daily alerts, is appropriate. With small cap trades, focus on buying dips or ABC patterns, and I'll be seeking to identify those ABC patterns as clearly as I can. With the larger cap trades, certainly I think we're going to see the larger cap resources stocks do quite well this year. BHP and Rio were largely flat last year. I think the circumstances are such that we're going to see much better performance this year, but I still believe the big gains are going to be in the small caps and the mid cap stocks. The takeover activity theme, I think, has not by any means run its course. And the best large cap trades for me are BHP and Rio. BHP, so we had a look at Rio, just about to break out. Let's have a look at BHP, which has already done a partial breakout. So let's pan back. So BHP is not very far away from its all-time highs, only a couple of dollars, whereas Rio has now had a high of $140-something dollars. It's still more than $50 below its all-time peak, whereas BHP really getting fairly close to it. So it's broken above this trading range. So for me, BHP heading towards $50, and over time certainly $50 and above. So bit of a disappointing finish on Friday, but I think it was just caught up in that late afternoon sell-off. So I'm expecting BHP and Rio to rebound, and I'd see exposure there during 2011 as being pretty positive. So that's it for this week. We'll certainly, I think, have a good start on Monday, and let's see what the week brings. Cheers for now.